A very good morning to our respectful lecturer Dr. Idawati and my dear friends. Today we are from Group 4 would like to present about topic 4, which is regarding partnership. I believe that already we have some basic knowledge what is partnership all about. And in this presentation we are going to we're going to discuss in detail about what is partnership. And I hope that our presentation is going to be interesting as well. So let's look at the next slide. Alright, so before we begin, I would like to introduce myself and my group members. I am Preetha Dr. Silvaraju and my metric number is 288819, and my group members are Sofinas, Yulfa and Sabrina. As you can see in the slide, these are the pictures of my group members. It will be easy for you later to recognize them during the presentation later. So, as you can see in the slide, these are the contents that we are going to discuss today in the topic of partnership. So the contents are definition of partnership. Under the definition of partnership, we will look two different definitions from two different sections and the differences between both definitions. Then we will look at the characteristics of partnership and followed by the type of partners. After we discuss these three things, we will deliver a case, the first case to all of us in order to make sure that we understand what does the definition of partnership, characteristics of partnership and type of partners says about that partnership and partners. Alright, so after that, after the first case is delivered, we will follow by the discussion with the limits to number of partners and minor in partnership. After we discuss the content number 4 and content number 5, we will deliver the second case in order to make sure all of us understand what does the content number 4 and content number 5 says all about. Alright, and then we will proceed with the existence of partnership. For your information, under the existence of partnership, we have like 3 to 13 different cases to make sure that all of you understand that what kind of situations will be arise in order to know the existence of partnership. Okay, so after that we will move to the syndicate versus joint venture, and for the syndicate versus joint venture we also have one case which is the final case to deliver, and then lastly we will move to the tax aspects. So these are the contents that we are going to discuss today. So without any delay, let's move to the first content, which is about the definition of partnership. Alright, so now let's look at the definition of partnership. According to Section 2 Income Tax Act 1967, what does it say about partnership? Okay, it says that partnership is an association of any kind. And okay, let me explain. Association means it's a group of people, they join together with a purpose. Okay, and it says that an association of any kind. Any kind means it includes joint venture, syndicate, and also the cases where a party to the association itself a partnership. Okay, the cases where a party to the association, it means that the subcontractors also is the one of the example for the party to the association. Okay, so this is how to relate. Okay, so in summary it says that an association of any kind between parties where they agree to share their rights, labors, powers, property, even the skills in order to carry on their business and share their profit. But it excludes the Hindu joint family. Okay, the Hindu joint family firm is actually existed during the operation of Hindu laws. Actually, this firm they operate according to the Hindu laws. So that's it's all about. So what we have to understand is, now Section 2 says that partnership is just an association between the parties where they share their rights, powers and assets, liabilities, labors and also their skills in order to carry on their business and share the profit, excluding Hindu joint family. That's it. Okay. The second section says, which is the Section 3 subsection 1 Partnership Act 1961, it says that partnership is the relationship between two persons. Okay, two persons in order to carry on the business with the purpose or view of profit. Okay, so this is what partnership all about, saying in the perspective of Section 2 of Income Tax Act 1967 and Section 3 subsection 1 Partnership Act 1961. Clear? Okay. Okay. I know that it will be like quite confusing to know and understand what does the section 2 says about partnership and section 3 subsection 1 says about partnership, right? So why don't we look at the differences between partnership so that maybe it will be easy for you to understand what that each section exactly says about partnership. Okay, so if you look at the slide, okay, I have separated the Income Tax Act 1967 and Partnership Act 1961. So we look at one by one the differences, what that exactly they said about the partnership. Okay, so the first point, under Income Tax Act 1967, it says that a partnership is an association between parties. If you notice the word that I highlighted in the slide and try to connect with the previous slide, maybe you can refer to the slides that we have sent in the group. Okay, so it mentions that partnership is an association between parties. Remember that I mentioned earlier in the section 2 of Income Tax Act 1967, the definition says partnership is an association between parties. So this is what referring to. And then if you look at the Partnership Act 1961, it says that partnership is a relationship between persons. So this is two different things, you know. Income Tax Act 1961 says it's an association between parties, but then the Partnership Act says it's a relationship between persons. Alright, and then second thing is Income Tax Act 1967. Under that, the purpose of partnership is carrying on business. Actually, both sections also their purpose is carrying on business, but the different thing is, the key point is, if you can see here, under Income Tax Act 1967, they said that they never mention of common business, which means both parties, they can be different businesses, but the thing is, the purpose is just carrying on a business. Alright, they join together to carry on a business. But then under Partnership Act 1961, they mention that the business must be in common, which means both persons must carry on a same business, common business, then they can form a partnership. Okay, and then if you can see the third point, both sections they say that partnership it has a view to profit. Alright, and then followed by the next point is under Income Tax Act 1967, it includes partnership includes joint adventure and syndicates. Remember that the any kind of association, in the bracket it mentions that syndicate, joint venture, everything. So this is referring that. And then under Partnership Act 1961, it doesn't mention about the joint venture and association all. Okay, and last point, you can see that under Income Tax Act 1967, the partnership, it combines the rights, power, property, labor or skill. Remember, you can connect with the previous slide. Yes, the definition. So that's all. So this is the basic differences. I think you might have some clear picture about the differences and the definitions, what the sections is exactly saying all. Okay, so that's all about the definitions. So let's look at the next content. Okay, so now let's look at the characteristics of partnership. Okay, there are two main characteristics that the partnership must have. You know, actually they are association between parties and carrying on a business with a view to profit. Okay, what is association between parties? Actually, it's mentioned that how the relationship can be created by. It can be created by a written deed, like a written document, something, the agreement, written agreement. The second one is oral agreement, and third one is a conduct of the parties' consent, between the parties' consent. Okay, and the second characteristic is the carrying on a business with a view to profit. Okay, actually this is about the businesses for income tax purposes, which has been defined in section 2 that you remember. An association of any kind can be anything like that, and it includes profession, vocation, trade and every manufacture, adventure or concern in the nature of trade. Okay, which mentioned in the previous chapter by our friend. Okay, so basically it says that the carrying on a business with a view to profit is about referring to the section 2, but it also includes all the businesses like profession, vocation, trade, and every manufacture, adventure, or concern in the nature of trade. The thing is, it just excludes the employment. That's all. Alright? So we have completed the partnership thing, everything, the definition and the characteristics. Okay? So of course, in the partnership will be formed with partners, right? So let's look at the type of partners now. Okay, as you can see in the slide, we have listed down like 5 type of partners. Okay, first is about the full partner. Okay, actually full partner is like the person that actively engage in the partnership business, and that person is responsible to submit the partnership tax return. Try to focus on the key points that I have highlighted, okay, so that it will be easy for you to remember also. And then the second type of partner is the salaried partner. Salaried partner is something like they draw salary, they get the salary from the partnership with or without the profit. They get, no matter they get profit or not, they will get salary. Okay. And then the third type of partner is like sleeping partner. Of course, sleeping partner, the word sleeping itself we can know already, right? Sleeping partner, they does not participate in activities of partnership, but they receive profit share. Yes. And the fourth type is the corporate partner. Corporate, actually it's like a company or non-resident company. They becomes partner of partnership by carrying on a business in Malaysia. So the key point is, no matter it's a company or a non-resident company, the thing is they carry on the business in Malaysia so that they can be a partner in the partnership. And then the last type is the limited partner. Limited partner is like subscribe to fixed capital and not actively engaged in management of partnership, which means they will have a fixed capital. They subscribe into fixed capital, but then they are not so engaged in the partnership activities. Yeah, so this is all about that type of partners. Okay, so this is the time to deliver the first case to all of you. So remember that I mentioned earlier that we already discussed the definitions already, characteristics and type of partners all. So now I'm going to deliver the first case to all of you so that we can know that how well we understand the previous discussions. Okay, the first case is actually related with the sleeping partner in partnership. So let's look at the first case. Okay, so it's time to discuss our first case, right? Okay, actually it's easy. Just try to make it simple to understand, okay? Actually, the first case name is Choo versus KLZO, Go and Tan Tuanu. It's a big name, but try to remember as you prefer. But make sure that the first name versus the first name must be remembered at least, okay? Okay, in this case, what is the issue? The issue is about whether the sleeping partner can be a partner in partnership. Okay, that is the question. Okay, with the knowledge that we have discussed earlier, okay, I hope that you already know the answer, but let's look further in this case, what it says actually. Okay, the facts of the case. Actually, in this case, what happened is one of the partner is a sleeping partner and did not contribute any capital. Yes, of course. What the sleeping partner means that they won't contribute anything, right? They are not so engaged with the partnership activities, but they receive a share of profit, right? So same goes to this case also. There is a share of profit to that partner, that sleeping partner, and he was given 3 out of 10 of share of profit. But what the judgment said is, since he received the profit, therefore it was held that he is one of the partner in the partnership. So it's very easy, right? Since we already discussed that there are many type of partners in partnership, in the formation of partnership, and one of that is sleeping partner. So according to this case also, even though this one of the partner is sleeping partner, since he received a share of profit, it is recognized as there is a partnership and he is the partner. Yes. So that's all about this case. Is it clear and easy to understand? I hope all of you easily understand what this case says. Okay. So let's look at the next content. So now let's look at the next content, which is limits to number of partners and minor in partnership. Okay, this is also easy. Okay, just like everything we already know. So if you see under the limits to number of partners, okay, there are two different sections. First one is section 14 subsection 3 subsection 8 Companies Act 1965. They limit the number of partners to 50 members only. But according to section 14 subsection 3 subsection B Companies Act 1965, they limit the number of partners to 20 members. Okay, so those who have taken the company law, I think they got mentioned this also. Okay, so the next content is about minor in partnership. Okay, it means that whether the minor can be a partner in partnership. Actually it can. So you look at the what that minor in partnership says. Okay, if you can see in the slide, they say that minors can be a partner in partnership business and they cannot liable in any obligations of the firm until they comes age, and the share of profit will be deemed for the tax purpose. Okay, all of you remember that in taxation 2 that we have count the divisible income, that chapter, and there is a portion for the minor person, so we will deem the share of profit until he comes age. I think we all remember in advanced taxation. So something it's like that, it's actually related to that. So this is about the limits to number of partners and minor in partnership. So very soon we are going to discuss about the second case related to these two contents. Okay, so we are going to look at the second case of this presentation based on the previous slide, the contents about the limits to number of partners and minor in partnership, and this case is specifically about minor in partnership. So let's look at the case. Okay, so now the name of the second case, case 2, is A 1953 FBX 11 subsection 1. So actually there is no verses in this case, the name of the case, and it's stated like this in the book also. So this is the name of the case. Okay, so what is the issue of this case? The issue of this case is whether the minor can be a partner in the partnership. So this is the main issue. So what happened in this case? In order to conclude the issue, so let's look at the facts of the case. Okay, what actually happened in the case is, in this case, a father registered his motor and rubber business as a sole proprietorship business, and the agreement started 1st January 1949. Since there is no proof that he constituted a partnership, it was held that the business is sole proprietorship. Okay, you see here they got mentioned that there is no proof that constitute partnership, which means I think there's no agreement, something like that. So there's no proof that there is a partnership. So what happens? So it was concluded there is no partnership, it was a sole proprietorship business. But what happened after that is, the father he wound up the prior business and took his 11 sons and made into a new partnership. Okay, what he did is, the father has opened a separate account for his minor sons and put a deposit to the account. And then as usual there is a meeting, and that meeting involves all the partners. Okay, so once the first decision has been made, where it says that since there is no proof that he constituted a partnership, which means there's like no any agreement or any consent between the parties, or there's no, remember the characteristics, since there is no any proofs like that, so the first judgment is actually about that the business is a sole proprietorship, not partnership. But after that judgment, this father wound out the prior business and enter into a partnership with his 11 sons. And what he did was, he opened an account for all his minor sons. Okay, not from 11, there are some minor sons. Okay, so he opened an account and put some deposit in their account, and as usual they involved in meeting also. So after this action, he bring this case, he re-appealed this case. Okay, so once he re-appealed, according to this current situation, after he took that several actions, so what the judge says is, it was held that there is a partnership because the agreement has acted upon and it was established that minors also can be partners in partnership. So here the agreement is like they open an account for the minor sons, and there is some proof that there is a partnership. So it seems like it's a proof of partnership, being partnership, and they also held that there is a partnership. Even minors can be a partner in partnership. So I think, is it clear? All of you can understand? So just the thing that you have to know is what happened in this case is actually, at first this father was having a business and sole proprietorship business, but then since there is no any proof that he entered into a partnership, the judge held that it is a sole proprietorship business but not a partnership business. So after that, what he did was he wound up the prior business and entered into a new partnership with his own 11 sons. What he did was he opened an account for his minor sons and deposit some money, and then as usual they entered in the meeting. There are some proofs. They entered into a meeting and there is an account for the minor sons also as the deposit. So those kind of proofs, and of course he entered in the meeting and there is an agreement, but it not mentioned in the fact, but then under the judgment it mentions that. So it shows that there is a proof, right? Previously there is no proof, but here it has proof. So it was finalized that the judge says that there is a partnership because there is an agreement as acted upon where it is a proof, and one more thing, he says that minors also can be a partner, so it is not an issue. So I think that's all from me, and I hope that first half all of you able to understand the first half, what is partnership and partners is all about. And I believe that the two cases that I have delivered to all of you is easy to understand. So after this, I'm going to pass to my next co-presenter in order to continue the presentation further. I hope you still interestingly listen to the presentation. So thank you from me. That's all.
Hi, my name is Sofia Salim binti Abdul Halim, metric number 280543. So we move on to the next subtopic, which is the existence of partnerships. In order to determine whether the partnership exists or not, the court looks at the intention of the both parties, sharing the profits or losses, joint administrations and the control of business operations, capital investment by each partner, and lastly, common ownership of the property. So in the case of John Gardner and Bowring, Hardy and Company Limited vs CI, the issue is whether the collaboration between Gardner and Bowring, Hardy and Company Limited considered as a partnership. The fact of this case is Gardner, a coal merchant, arranged during a coal strike to buy imported coal from Bowring, Hardy and Company Limited, which is one of the listed companies. The coal was invoiced to Gardner at cost, and he shared with Bowring the net excess on his sales. The commissioner found as a fact that two persons involved were carrying in the trade as a partnership, and their decision was upheld by the court. Profits were divided equally, and the court decided that the arrangements were partnership. This is because of the fact that the net profit obtained was equally divisible, as well as the fact that instead, when one party sold the coal, it is not on his behalf but on behalf of the both parties, which constitute a partnership between Gardner and Bowring, Hardy and Company Limited. The relevant case is the Dickenson vs Roche. The issue is whether the son of the appellant are the partner of the business. The appellant, which is a farmer, entered a partnership with his three sons to reduce the income tax liability in the business profit. There were no rent has been paid, no account or books has been kept, and also no distributions of profit. Only the appellant signed the check, the business receipts, and has been paid into his private bank account and into the firm's account. It was plain from the facts stated in this case that there were no partnership deeds was acted upon, and the business was treated as a sole proprietorship. The farmer claimed that there was a partnership existed because him and his three sons claims that the profit has been distributed because the partners live together as a family in this house. Therefore, it was held that there are no partnerships, although a deed of partnerships has been drawn up. It was not being acted upon, and it is not governing the transactions of the parties who were carrying on exactly as before. In other words, the executions of partnership agreement will not itself create a partnership unless the agreement was put into effect. Like the previous case before, CIR vs Williamson also faced the same issues, whether the farmer and his sons were in a partnership. The farmer and his sons worked the farm jointly, and the list of the farm was in the joint name. All business transactions, however, was carried out alone by the father. No books or records of any kind were kept, no divisions of profits was made. The bank account was in the father's names alone and was only operated by him. All the sons did was to work in the farm, receiving no wages but receiving such sums as and when he needed. The farmer claims that he was in a partnership with his sons, although no deeds of partnerships has been altered into. It was held that there was no partnership existence in this case for income tax purposes. The next case is between Fenston vs Johnstone, whether the agreement between S and the taxpayer should consider as partnership. The taxpayer wanted to buy and develop the land, but he lacked of the finance, so the land was bought by S in agreements which provide that the taxpayer should be paid him one half of the profits for consideration by introducing him to the property to S and agreeing to assist on its development. So in this agreement also stated that he also will be responsible on one half of any losses of this arrangement, and this arrangement should not constitute a partnership between S and the taxpayer. However, it was held that in the terms of the agreements had consisted a partnership between S and the taxpayer because there is a share of profit and losses amongst them. Next, the case of Cribb vs Korn. So Cribb owns an agricultural farm and Reno was his assistant. So Cribb agreed to lease Reno 2 cultivation paddock with the rights to graze the horse and the cattle, and he also supplies the equipment for the use of Reno. Reno agreed to pay him half of the productions, and he hired Korn as his assistant to do the works in the farm. But when Korn was injured, he sued both Cribb and Korn and stated that they were partners and both of them were his employers. However, the High Court held that this is not a partnership, as they were doing was sharing gross returns and never intend to conduct a business as a partnership. Reno was found all the time to be working on his behalf. Next case is Cost vs Coulson. The issue is whether the defendant was a partner with Mill who was in charge of the actors. Coulson was the theatre manager who agrees with Mill to provide his theatre for one of the Mill's production. Under the agreement, Coulson will receive 60% of the gross income for the selling of the tickets, while Mills will get the other 40% from the sales of the tickets. During the performance, one of the audience, which is the plaintiff, Claus, was shot in one of the scenes. She sought to make Coulson liable on the basis that Coulson and Mills were partners and therefore liable for the incidents. It was held that the claim was rejected as the sharing of gross income did not create the partnerships within the meaning of Partnership Act of 1961.
Thank you, Sofinas, for the explanation, and I will explain more about the cases. Hello guys, my name is Yufa Warisa Putri binti Warzo and my metric number is 289481. So let's continue about the next case, which is KM 1955 FB19. This case is the issue of this case is whether the income considered as business income or employment income when the employee is admitted as a partner. So the fact is, it was established that a legal assistant who was employed under a contract of service does not carry on a profession even though he perform professional work. So the salary paid to him while serving as an employee is received from carrying on employment. Later on, he was admitted as a partner. So the court held that the income received would be taxed as business income. Okay, let's move to the next slide. Before I tell you guys about the case, in deciding whether a partnership exists, we need to consider a few things, which is whether there is a formal agreement in the partnership, or whether the partnership is registered with the registrar of business, whether it is similarly registered with any appropriate professional body, whether the organization maintains its own bank account, and if so, who are the check signatories and whether there are any limitations imposed on a particular signatory, and what names are shown on the organization's business stationery, its trade premise, and its trade directories in the register of the registrar of business. So let's move to the case, which is SK versus Ketua Pengarah Hasil Dalam Negeri. So in this case, the issue is about whether there is existence of partnerships. In this case, the taxpayer who commenced an electrical repair business as a sole proprietor did not report the income from his business for a number of years until his premises were raided by the tax authorities. Assessments were subsequently issued to the taxpayer, but the taxpayer claimed that his brother was a partner as shown by the certificate of registration of business, and that his brother had made various loans to him. So the special commissioners held that the certificate of registration was prima facie and strong evidence of relationship, and the taxpayer was entitled to set off the partner's share of the profits for the relevant period from the assessable income. Okay, now we will talk about employee or partner in a partnership. Employee may be admitted to a partnership business, then the master-servant relationship will be ceased, as we all know. Okay, now we will talk about employee or partner. For the case, we can refer to Comptroller of Income Tax versus GB Roche 1951. The issue is whether there is employment income derived. In this case, a taxpayer commenced his duty as a pilot with Penang Pilot Board on 29 June 1947. But on 1st August 1947, the taxpayer was admitted as a partner in the partnership with the existing member of the Penang Pilot Association. So, the court held that the respondent has one form of employment, which is from 29 June 1947 until 31st July 1947. So, after that, which is 1st August 1947, the admitted of partnership, he became a partner. So, for the tax purpose, this would imply that only prior to 1st August 1947, the taxpayer was essentially an employee deriving employment income. In other words, an employment may be admitted to a partnership business, and when that happens, the master-servant's relationship would then cease. So this is my last slide for my part. This case is about Director General of Inland Revenue versus Abdul Wahid Bidin, year 2021. So the issue of this case is whether the taxpayer's income derived from the operation of his petrol station was assessable as a sole proprietorship or a partnership. The fact is, the taxpayer operated two petrol stations which were registered as a sole proprietor. But it was claimed that the business were in fact carried out by way of partnership with his two children. And the taxpayer declared 50% share of profits in the business, and his children claimed the remaining profit as partner. But the DGIR had rejected the claim of partnership as the business were registered as a sole proprietor, and there is no evidence had been furnished to the DGIR during audit. An additional assessment was raised on the taxpayer as a sole proprietor, and the assessment on his two children were accordingly reduced. DGIR submitted that a partnership agreement alone does not prove the existence of partnership for income tax purposes. So to constitute a partnership, the elements of partnership must be established. Since the taxpayer has failed to prove any participation in the capital by the purported partners or other significant contribution to the purported partnership by the partners, as well as the written form for partnership, which is Form P, borang nyata perkongsian under the IPA, was not filed, DGIR has no basis to raise assessment on a partnership. This was held that the income of the taxpayer from the operation of the petrol station was correctly assessed solely on the taxpayer as a sole proprietor. With this, I will pass the next topic to Sabrina, which is the next presenter. Thank you.
Thank you, Ufa, for passing on to me. I'll continue the presentation of Syndicate and Joint Venture. But before that, let me do the proper introduction of myself. Hello everyone, I'm Nur Sabrina. My number metric is 289452. So, what is Syndicate and Joint Venture? I'm sure all of you have heard of these terms, right? But this is not the syndicate you're thinking of, which is the criminal thing. No. But instead, a syndicate or joint venture may be a body of people taking part in some undertaking or ventures. For instance, to purchase rubber plantations with the intention of subdividing and selling them. Sometimes the association of people formatting the syndicate is temporary. This is in contrast to a partnership, which gives the impression that it is not a temporary relationship. A syndicate, it is said to be non-equivalent to a firm or a company or partnership. But by definition, under Section 2 of the Income Tax Act, it is a partnership. While under the Partnership Act 1961, joint ventures and syndicates may not be partnership. Let's look at the case of Tysler and others and the ship owners syndicate. The issue here is whether there is a conversion of liability in syndicate. The fact is a group of 20 underwriters styling themselves as the syndicate, and they underwrote a policy of marine insurance. Then each member subscribed certain fractional proportion of the total sum insured. But then one day the ship became a total loss. And that's when the argument begins, which is from the plaintiff side, which is Tysler and others is the plaintiff. Okay. So they argued that the use of the term syndicate means in part a combination and indicates that the subscription is a firm of partners. While from the defendant side, which is ship owner syndicate, argued that the liability is several and not joint, not in a group. Okay, the policy provided that each subscriber binds himself only for his own part. So the decision or the judgment here is it was held that a syndicate in connection with marine underwriting does not convert liability. Otherwise, several into a joint liability. It concludes that the liability of the 20 underwriters was several and not joint liability, as it is in the case of a partnership, and the syndicate was not a partnership. By referring to the previous case, which is the previous slide, Tysler and others and the ship owners syndicate, a number of differences between a partnership is on one hand and syndicate or joint venture is on the other hand. Let's look at under contract to understand what I meant by what I see just now. Is under contract, both partnerships and joint ventures are generally created by contracts. But in the case of a joint venture, there need not be a business carry on for mutual benefit. There's no need to be a business carry on for mutual benefit. For agency, in the case of joint venture, a party to the joint venture cannot pledge the credit or bind the other co-ventures. For partnership, a partner's act binds, where in general the firm binds. Moving on to management, in the case of joint venture, there is in general a provision for a person to act as a manager with authority to bind the joint venture. For the assignment, in a joint venture, a party can freely assign his interest in a joint venture to another. For partnership, this is not possible, or it only operates in a very limited way. Under mutual trust, for partnership, a breach of mutual trust may be a ground for dissolution of the partnership. For joint venture, a similar obligation does not exist unless provided in the agreement. Next, we will look into tax aspects. Tax aspect is just about the assessment of partnership business. So I'll be showing you one of the assessment in partnership. The income of a partnership for any period is calculated in the same manner, on the same basis as of a person carrying on a business. However, the profit figure of the partnership business is net after adjustment are made for partners' salaries, interest on the partner's capital, and other personal expenses charged in the partnership account. So here is one of the example, which is how or the steps to get divisible income of the partnership under section 55 subsection 3 for the business period. We have learned this in tax 1, but I'm just showing you that this is one of the assessment in tax aspect of partnership. So section 55 subsection 3 and subsection A is partners remuneration, which is wages or salaries, deduct from adjusted income, as you know, and then following to section 55 subsection 3 and subsection B, which is interest payable on partners' capital, and then following to private expenses of the partners charged to the partnership account, which falls under section 55 subsection 3 and subsection C, and that's where we get divisible income. This is just to recall back, even though this is like the basic of taxation, but it's okay. Moving on to the next slide. For adjusted income of an individual partner falls under section 55 subsection 5. I know before we begin or before we get divisible income, actually we have to calculate adjusted income first. But then I just wanted to show you that what I found for tax assessment in partnership is one of it is section 55. So I just followed the order, which is first section 55, subsection 3, and so on until this one, the latest one, which is section 55, subsection 5, which is adjusted income. And the items are share of divisible income or loss, and then remuneration, follows by partners' remuneration, interest, and private expenses. So here's the example, which you have gone through in section 1 too. So I guess this is it from our presentation. Moving on to the next slide, we have surprise for you guys. This marks the end of our presentation. We hope that today's discussion is effective and all of you understand the contents and the cases in partnership. But before that, we would like to tell you guys that the surprise that I mentioned before, there's a gift in it. So stay tuned until the last video, and thank you.